Hello and welcome to this special edition of Global Insights on China's economy, a series of high-end interviews with movers and shakers, economists and industry watchers. I'm Xu Qinduo in Beijing. Our guest today is Jens Eskelund, President of the EU Chamber of Commerce in China, here to share with us the EU business perceptions of the Chinese economy.
Jens Eskelund is President of the European Union Chamber of Commerce in China and also serves as the Chief Representative in the Greater China Area and Northeast Asia for Maersk, a top shipping container company. He has lived and worked in China since 1998. He is fluent in Chinese and has deep insights into the country. With over 20 years of experience, Jens has witnessed China's transformations firsthand. As a leading voice for over 1,700 EU member companies, he consistently advocates for building mutual trust and increasing understanding between China and Europe to create more opportunities.
Welcome to Dialogue, Jens. We have seen the Chinese government rolling out a slew of policies to help grow the economy. What impressed you the most? How do you look at the policies?
I think a lot of the things that have happened were timely and necessary in order to bring stability to the system and rebuild confidence in the future prospect of the economy. What we have seen primarily have been efforts so far to alleviate local government debt. We have seen support for financial institutions, and we have seen support for developers so that they can finish these apartments that people have already paid for. So a lot of initiatives really geared towards creating a stable foundation, creating stability in the system, and that's very, very positive. Where we perhaps still need to see something is something that is directed more specifically towards increasing consumption, because what we see amongst both the members in the EU Chamber of Commerce, but I think also in the wider business community, whether it's Chinese and foreigners, that we have had these now 25 consecutive months of deflation, according to the National Bureau of Statistics. And that is, of course, something that is hurting companies. We see profits eroding, and we are seeing inventories building up, and we are seeing a very steep increase in China's exports because the goods cannot be absorbed locally. But if you sort of start that consumption engine again, I think some of these pressures would be alleviated for companies, whether they're Chinese or foreign.
Well, consumption, of course, like a service industry, sort of related. Some say it's really about the confidence. Do you think it's about the confidence to spend, or the lack of confidence? Somehow people prepare for long haul. They tend to be more thrifty. In a sense, what can the government do?
I think, it's a natural reaction when you find yourself in a situation that many Chinese find themselves in right now. About 60-70% of household wealth in China is tied up in real estate. And when there's doubt where sort of the future value of that asset is going, the natural inclination would be to save and to wait and see. The thing is, the money is actually there. I mean, the Chinese people have never saved more money than they do right now. But it's just sort of the willingness to go out and spend some of these savings that is not there. So a big thing would be to sort of regain, to rebuild the confidence of the consumers. And one obvious place to start is that making sure that, that the real estate market is stabilized, that it finds a bottom, and people think that, things will be moving forward from here. But it's all about, I think, people feeling confident about their economic future. And there is a bit of insecurity in China right now, and I think that is impacting spending.
In terms of this, this overall, let's say, macroeconomic this situation, as you mentioned, of course, the government is doing to stabilize the property market, of course, to dealing with the local debt problem.
Yes.
Are you confident those problems will be resolved maybe in the near future?
I'm sure that the things that are happening now are serving to fix immediate issues. What we think in the chamber also needs to happen is that there is a look, really a firm look at the economic model. The Chinese economy has, to a large extent, been characterized by being investment-driven. Investment still comprises a very high proportion of the Chinese GDP. Maybe some of these resources could be allocated towards the demand side, and some of these initiatives that could rebuild confidence and could help people feel more confident about spending some of their savings. So maybe in addition to sort of look at how you stabilize the foundation, you should also begin to look about, how really can you start that consumption engine again, that demand side, and that we think might take sort of a look again whether sort of there needs to be some adjustment to how China works systemically today, in particular in how resources towards investment are being allocated.
Mm-hmm. We'll speak of this transformation of the economic growth model, from relying on investment, export, property sector to now China is moving obviously to, using this catchphrase as new productive forces with a focus on science and technology, upgrading of the traditional industries. How do you look at the efforts?
I've been in China since 1998, and I can see sort of the composition of China's manufacturing, the composition of China's foreign trade has changed dramatically. And I think China has made a very conscious effort to climb the value ladder and creating ever more sophisticated products. So I think, in many ways, high quality productive forces are already here. When you look at, for example, what's happening with EV, with batteries, with green tech, and many other sectors, right, where China is really at the forefront today. I think that, of course, creates some issues from Europe, because a lot of these are sectors now where Europe and China will be competing head to head, because these are areas where Europe traditionally has been strong and where China is emerging as a very significant contender. That was not the case 10 years ago, because China and Europe were not competing in these same areas, but that you're beginning to see now. And that's where I think that there actually is a potential for an increase in tension unless Europe and China find a way to begin to talk about these things.
China has removed all market access restrictions for foreign investors in the manufacturing sector, a landmark move made by the world's second-largest economy as it opens its doors even wider. The latest version of the National Negative List for Foreign Investment took effect on November 1st, scrapping the 2 remaining manufacturing-related items on the previous list. The total number of items on the list has been further slashed from 190 in 2013 to 29 as of this year. For China, the manufacturing industry is the earliest sector to open up to foreign investors, and it is also the most competitive, with a high level of integration with the global industrial division of labor. In addition to the manufacturing sector, China has also been continuously expanding opening up in other fields, such as in services, finance, and healthcare. In late October, the Ministry of Industry and Information Technology launched a pilot program to expand opening up in value-added telecom services in the 4 designated areas of Beijing, Shanghai, Shenzhen, and Hainan Province. According to China's State Administration of Foreign Exchange, as of April 2023, the profit rate of FDI in China over the previous 5 years was 9.1%, higher than that in the US, the EU, and other emerging economies, including India, Brazil, and South Africa.
How do you look at those efforts?
Yeah, I think what China has been very good at through these efforts is to create a convincing case for foreign companies to move their manufacturing to China, to vertically integrate their value chains in China. And that's, of course, very good for China. It creates jobs here. Companies are moving their R&D here. They are paying taxes. They are localizing supply chains. That's very, very good. I think where the problem arises is perhaps in Europe, where they think, hang on, wait a minute. Why is it good for Europe? If you take a European factory and you move the manufacturing to China, what's in it for Europe? And I think that's sometimes where you begin to see sort of the seeds of contention growing, exactly because it is not longer evident that it necessarily is in Europe's interest than if you have. And that's where I think we need to have a look at again, what is the value proposition for both China and for Europe. We still think, of course, that there is tremendous value being created by European companies in China, European subsidiaries subsidiaries here. But I think we need to recognize that value is not universally recognized in all places. And maybe also take a look at how can we make sure that sort of the benefits of globalization, of these interdependencies, of this interaction, that they are sort of being distributed in an equitable manner between trade partners.
But people would say, the European countries could open further too to welcome the Chinese investment, to set up factories in their land and create jobs and pay taxes, right?
Yeah.
So that's a good competition.
Yes, and I think Europe should consider that. I mean, just like China has done, I think that Europe should consider what are the conditions under which that Chinese investments in Europe could actually create benefits similar to. You should remember when the automotive industry came to China here, right? They were told to hand over 51% of their equity to a local partner.
Joint ventures, right?
Joint ventures. That was a requirement. Or else you had to pay a 25% tariff to import your cars. I'm not suggesting that Europe should do that, but we have seen how European companies here have fully localized their supply chain. They have localized their employment. They pay their taxes here. They do their R&D there. I think if Chinese companies did the same in Europe, I think you will find actually a quite welcome audience. So maybe there are some experiences here that European companies have had in China that Chinese companies can use in Europe. I think the key point here is that we should always ask ourselves, as we are doing in China, we as European companies, we are always asking ourselves, what's in it for China? I think maybe Chinese companies also should ask that question, what's in it for Europe? And then maybe we can find a platform.
Well, they are going overseas. I mean, European market is one of the most important market for them, of course. Staying on the topic of the Chinese economy,
yes,
of course, the target growth for 2024 is about 5%.
Yes.
How do you look at the target? Will the Chinese economy grow around 5%? Will that be realized?
For me, actually, the GDP number is not super important. What is important to me is the composition of the GDP number. If you have a very high investment component, that is perhaps not fantastically important to us as European businesses. What we're looking at, for example, is consumption. How big is the consumption growth? So for us, really, what constitutes healthy growth is that there is a reasonable distribution between the different components of GDP, whether it's consumption, whether it's export, or whether it's investment. And that's where we have seen for a number of years now that it appears, which I think is also recognized in China, that it's been a little bit, over-reliant on investment and too little perhaps on consumption. And that's where we hope that we over time will begin to see that there is a realignment of sort of the components of GDP, so it tilts more towards the consumption side. Exactly.
Mm-hmm. Well, of course, you represent the European business here. There is a survey on the Chinese side recently, the end of October. They say about more than 400 foreign businesses. They say they showed that 90% feel China's business environment, quote, satisfactory or better in the third quarter. I'm curious about the third quarter. What happened in the third quarter that people are becoming more positive?
I think it's difficult for me to point to something specific on the ground, but I think what definitely happened in the third quarter is that we had these policy initiatives coming out beginning in the middle of September. And I think that gave rise to some optimism that I think what people saw in September was that there appeared to be a recognition with the central government that something will need to get done in order to sort of re-energize conditions on the ground, and that is positive. What we think is important now is that you keep momentum, you keep focusing on not just creating sort of a positive mood, because the positive mood will dissipate if you don't see real improvement on the ground. But we need to continue to look at what can we do to further adjust and sort of promote healthy growth overall in the economy.
Mm-hmm. But obviously, I think you probably know more on this. Of course, last December you said most of your member companies remain committed to the Chinese market. I'm thinking about the future of the Chinese market for the foreign businesses, including those from European countries. Yeah. So they are. You still think so? They're committed. Stay on.
I think if we meet again 5 years from now, then I think you'll find that it's pretty much the same number of European companies in China. I think the challenge right now is that European companies are beginning to consider additional investment, should that be in China or should it be somewhere else outside of China? And I think right now, given the domestic economic situation and some of the other things we see, trade tension, geopolitics, what have you not, has as a consequence that some of these additional investments are now being made outside in China rather than inside in China, which we think is a pity, because we still think that there is a significant future potential for European companies in China. So we hope again that sort of some of the things right now that are pain points, bottlenecks for European companies, that we'll be able to fix that over the next few years, and then maybe we will see a positive change in investment levels in China.
Mm-hmm. Well, related to that, of course, in September, there's a document published by your commission here saying that the European business confidence in China was an all-time low, actually.
Yes.
So people are concerned, obviously, with some of, let's say, the situation on the ground.
Yes.
So what specifically are the things they are concerned with, or they are expecting the Chinese government to respond positively, to change, to move probably in a more positive direction?
It was actually a little bit of a surprise to me also that it was an all-time low, because we have just been through the pandemic and all that, and I would have thought that it would be lower during that period of time. But I think the main reason here is that we have a lot of the same old issues that we had before in terms of market access, in terms of geopolitics and all that. But what is new now is that because of these 25 consecutive months of deflation, it has just become harder to make a profit on the Chinese market. So I think the main driver when you saw the drop in business confidence this year has been this reduced ability to make a profit. And that's again where we hope that we see an upswing again in demand and that margins will improve for European companies. But I think it was primarily economically driven, the drop that we saw in the business confidence survey this year.
Mm-hmm. Well, let's shift to the issues between China and the European Union, of course, the EV tariffs right now. Are you confident that they are in negotiation right now, try to find a way acceptable to both sides to avoid a trade war? So what's your expectation? Can they find a proper problem? People would say they have to find a proper solution to that, right?
Yeah. First of all, I think that the EV situation is a little bit of a distraction. And I don't think it's representative of the EU-China trade relationship. Last year, EVs accounted for 1.8% of European imports from China.
That right, small part.
Exactly. and that's what to me is a little bit surprising. We spend so much energy talking about 1.8%, where maybe we should look a little bit more of the 98.2%.
Exactly.
Where actually Chinese exports are doing very fine. If you look at the first half of the year, Chinese exports to Europe in volume terms, the number of containers shipped actually grew by 10-11% or so. So you should consider, there's basically zero demand growth in Europe right now. So if China is able to increase its exports to Europe by 10-11%, it is very, very substantial. Now, what worries Europe a little bit is that Chinese imports from Europe are actually down by 5% in the same period in volume terms. So we're actually seeing that the trade imbalance is increasing right now. So I think we need to take sort of the holistic picture of it, not just focus on small parts, but recognize that when you sort of look at it overall, China is doing very, very well. I think China is not just towards Europe. I think with the exception of North America, we're actually seeing China taking market share in all other markets in terms of its exports. So China is doing fantastically well. Now our expectation is that global growth in container volumes will grow around maybe 7% this year. And 6% of these 7% is due to growth out of China. So, growing 6-7% is twice as fast as global economic growth. So, deglobalization, onshoring, friendshoring, nearshoring, we don't really see it in the figures. Maybe we see a fragmentation and we see sort of a regrouping of trade patterns, but really in this particular year, 2024, we have seen a quite strong trade performance.
Mm-hmm. How do you explain this, let's say, the reduction of import from European countries? Is that because of there's still slow resumption, for example, for tourism, or Chinese students going to European countries because of the pandemic?
I think when you're looking at the low import figures, some of it, of course, has to do with the general low consumption growth that we see in China. Chinese consumption is simply not growing at the same pace as it did before. Some of it is, of course, also we talked before about in China, for China, that companies are moving their manufacturing here in China to sell to the Chinese market. But part of it is also industrial policy, where you have requirements or you have an aspiration that China itself, for example, in the context of dual circulation, is manufacturing a bigger part of its total consumption within the borders of China. So this mix, consumption in China for China, company decisions, but also industrial policy. I think all three have contributed again to have this, weak import performance and having a strong export performance at the same time.
Mm-hmm. We are also seeing, of course, the Chinese side is opening further to the outside world, for example, in terms of a visa application, for example, free visa, for treatment from many increasing number of countries in the European side.
Yes.
That's a welcome move. And
it is super welcome. And I think we have seen pretty immediately that the countries that have been granted visa-free access, we begin to see that actually reflected in the number of Europeans coming to China pretty instantly. Before, you needed to plan maybe 1 to 3 months in advance before you could come. Now, an executive in Europe can think, next week I want to go to China, book me a ticket, and then just hop on the plane. I think in particular, after the pandemic, in order to sort of resume people-to-people ties and this sort of fluent engagement, and where unfortunately we have seen the foreign population drop by a lot, in order to sort of reacquaint the two sides with each other, this is an important step. I think 18 out of 27 EU countries have gotten visa-free now. We, of course, hope in the chamber that all 27 will be granted. We, of course, also hope that it will become easier for Chinese to visit Europe, because we also recognize that there is a need for companies and people to have sort of a seamless travel opportunity to Europe as well. But from a business perspective, this is certainly welcome.
Mm-hmm. Of course, we're living in a time of, with uncertainty, sometimes unpredictability. How do you look at the potential of China-EU cooperation in terms of business, in terms of investment, in terms of traveling, for example? What's the potential there? What we can do to explore more of the potential between the two sides, to bring them together instead of drifting away from each other?
I think, first of all, we need to recognize that we are at a difficult period of time right now for many reasons. And I think when we first recognize that we are in a difficult place, we need to try to understand the point of the other party also, and accept that the other party might have legitimate concerns that needs to be addressed in a way that works for both sides. And then I think we need to remind ourselves that the relationship between EU and China has created enormous value in the past. And we believe that there is still a quite significant potential for Europe and China to create value together. But I'm nervous right now the way that things are going, and also with the sort of increase in imbalances in trade, that things are not going in the right direction. So I think it's actually becoming a little bit urgent that we begin to rebuild trust, that we find a platform to discuss these matters, and that we take a really close look at the concerns of the other party to see what we can do together, so we do not inadvertently ruin that potential for value creation together.
Mm-hmm. We'll speak of the future, of course. We have this EU trade chief in waiting, the upcoming Commissioner Sefcovic, said recently that China was the bloc's most challenging trading partner, with a tough rhetoric. How do you look at that?
Yeah, I think what is happening in Europe right now is that when you sort of look at trade trade and security is a little bit of a continuum. And as you will note, compared to his predecessor, who only had the trade portfolio, Šefčovič now have both, trade and economic security. And I think that is in recognition exactly that if trade is not done in the right way, if trade is done in a way that it actually pries entire industries out of their home base, then it also, in some cases, might become a security concern, simply because it is a matter of security if you're not able to retain certain strategically important industries. But I think there's also an optimistic message in it. I think when we say China is difficult, it is because China is, of course, an incredibly efficient, phenomenally capable industrial nation. So I think it's also a recognition of the size that China has as the largest origin of goods being imported into the European Union. I don't think there's anything in what he said that precludes that we should find solutions, and I think we should all try to find solutions. But I think it's also a recognition it's not going to be easy. But I think we have an obligation to try our best.
Yeah. Well, lastly, of course, it's not only about China and the EU. We have Trump's return to the White House.
Yes.
There's a lot of people are responding, some countries probably a bit of panic response,
Yes.
Trump is coming back, more tariffs, of course, on Chinese products, services, and also on European, maybe 20%.
Yes.
So what's your expectation? Trade war, globalized trade war?
Yeah, I certainly don't hope so, because we don't think that trade wars benefit anyone. We think it is important right now that we focus on how can we create stability. And again, I think this sort of again underscores the urgency of everyone trying to sit down and work out solutions. I think it doesn't look too rosy right now, to be honest. But I also just think that this is even more reason now that we need to take a deep breath and distance ourselves a little bit from the situation and say, what can we actually do? What should we be doing in order to really protect our own interest, but also protect our interest in a way that still allows us to have constructive relationships with the rest of the world?
What will be the possible impact, on China-EU relationship? I guess I'm talking about the trade. Will Trump's pressure somehow, the European Union will be under pressure, somehow will be distance themselves from China, or they will get together closer because of the pressure?
I think when we are living in sort of an increasingly unstable and volatile world, it sort of emphasizes the need for Europe, as Europe has also expressed itself, the need for Europe to sort of become more strategically autonomous in important areas, such as trade, and perhaps also in the longer term when it comes to security questions. And I think that is one thing that China perhaps can also do together with Europe, that is recognize the importance of Europe as a standalone party, and not always maybe look at Europe through the lens of what's going on elsewhere in the world. I mean, Europe is its own. Europe is an autonomous agent, and that's how we should be looking at each other.
Thank you, Jens. Thank you for
having me.